To my surprise, Tesla stock is actually not having too bad of a day today. Tesla is actually outperforming Nvidia, Apple, Microsoft, Google, Amazon, all of its other big tech peers. But yes, the main question is how much carnage is left for markets, this global financial meltdown that you are seeing. Is it over with? Are we going to get an emergency Fed rate cut? In fact, according to Bloomberg, there's a 60% chance of an emergency cut by the Fed this week. It says here, traders are pricing in a 60% chance the Fed could issue an emergency 25 basis point rate cut in the next week, Bloomberg reported. That's evidenced by an extreme rally in the U.S. bond market, with U.S. Treasury yields, which are tied to interest rate expectations, dropping to their lowest level in a year. Now, let me tell you right now, if the Fed comes out and does an emergency cut, it's not going to be 25 basis points, at least 50, if not as high as 1%, maybe even 2%, because just to get back to neutral, you need about 2.5% worth of rate cuts. And I think if the Fed is going to decisively take an action, it's not going to be a small 25 basis points. That doesn't move the needle for anything we're dealing with. Because what's happening is the Bank of Japan is raising rates. So you're seeing Japanese investors, like retail investors, were doing this. Big banks, corporations, the government would borrow money in Japan with very low rates, invest it in the US with higher rates. Now Japan's starting the process of raising rates. If we start to lower rates, that differential gets smaller, potentially creating less of the unwind effect that you are seeing currently, well, causing a global meltdown. So the Fed actually taking more decisive action here would make sense. But what does Chicago Fed President Goolsbee say about the situation? He says if the economy deteriorates, the Fed will fix it. As it's as simple as that. He did say, quote, "I'm not going to bind our hands of what should happen going forward because we're still going to get more information. But if we are not overheating, we should not be tightening or restrictive in real terms." And considering the neutral rate seen by basically everyone is the federal funds rate minus inflation on a 12-month basis, your year-over-year inflation rate. So if you're looking at that as your metric of where neutral is, it's at about 2.7, 2.8% for the federal funds rate. That's where neutral would be. So we're far from that at 5.25 to 5.5%. Now, there is some historical precedence between the VIX and emergency Fed rate cuts. Typically, the Fed does not give you emergency rate cuts unless the VIX trades above 40. In fact, today, the VIX traded at 65, a level only seen 2 previous times in history. The only 2 times the VIX has traded above 65 were the 2020 pandemic and the 2008 financial crisis. This puts the VIX up a whopping 550% from its July 2024 lows. As a result, the S&P 500 has now erased $5 trillion of market cap over the last month. At the time of recording this video, the VIX is still up 52% at about 35.54. So you're still seeing a lot of fear out there. Not as bad as it was in the beginning of trading, but the VIX is still at that emergency cut level. Now, whether or not an emergency cut would actually be a good thing or not, I think that's really a topic for longer discussion that we won't do as much here in this video. I talked about that more in the last video, so go ahead and check that out if you have not done so already. I do think, though, the outperformance you are seeing in Tesla today relative to other big tech peers is quite remarkable, and that just shows how bullish people really are on Tesla stock. Even a day like today, Tesla's down less than 2% at the time of recording this video. That's outright impressive. And for anyone that was doubting Tesla's ability to do well here, I think you really want to second guess that after seeing what's happened today. Liz Young-Thomas, she is the head of investment strategy at SoFi, says the 2s and 10s uninverted. This was briefly, the 2 and 10s are now inverted again, inverted. what looks like about 10 basis points at the time of recording this video, 9 basis points. So it was a brief uninversion. VIX spiked to 65. Things move fast. Lots of chatter about an emergency rate cut. Can't know yet if this is a short-term blow-up or the beginning of something bigger and longer. In the meantime, fear begets fear, and a cut doesn't fix it. Fed Goolsbee also said in his interview on CNBC today, the Fed will respond to conditions. He also says if the stock market move gives the Fed indication over a longer arc that we are looking at deceleration in growth, we should react to that. Liz Young Thomas again on X says a simple model based on inflation-adjusted 10-year yields in the US and Japan suggests that despite significant appreciation of the yen versus the US dollar from 161 to 141, the yen should be at 132. More room for the yen to strengthen and more room for carry trade volatility. Fed Goolsbee, when asked about an emergency rate cut, says everything is always on the table, including raises and cuts. Tom Lee over with Fundstrat is putting out a new note today that says equities suffer technical damage, which takes time, but consistent with tough August. Second half of 2024 still expected to gain strongly, led by small caps. Part of the reason for some of this bounce back we've seen in markets today was the ISM services data. As I really warned about in some of the last videos as well, this data could have made today way worse, or it could have made it a little bit better. You can see from Kevin Gordon here on X, employment component in the July ISM services PMI rose to its highest since September of 2023. You can see today ISM services PMI on the headline number came in at 51.4. The expectation was 51. ISM services business activity came in at 54.5 versus expectations of 50.9. So much better than expected. ISM services employment was expected at 46.5. So that 51.1 number is also a great sign. You did see ISM services new orders that came in at 52.4. You were expecting 49.8, so that was also a big beat. And then ISM services prices that came in higher than expected, but not as high as maybe they could have been. This is the inflationary aspect of services. You came in at 57.0. We were expecting 55.8. So overall, good data we got today with the ISM services PMI. Now, there is a lot of moving parts right now in our markets. This carry trade from Japan basically causing an implosion in global financial markets. Not obviously just here in the US, it's much worse over in Asia. And we'll see if that does continue. I think in the near term, the Fed, whatever the Fed decides to do to react to the situation, I think that will also be very important. We do have some more data points coming out this week, especially Thursday with initial jobless claims that will be also very important. There still is some earnings as well this week, including, just to name a few, Palantir here in after hours, Uber tomorrow morning, Supermicro, Rivian, Airbnb, Wynn Resorts, Devon Energy tomorrow in after hours, Shopify, Walt Disney, Novo Nordisk, CVS Health, Lyft, and Sony Wednesday pre-market, Robinhood Wednesday and after hours, Eli Lilly Thursday pre-market, as well as Datadog and Novavax. Thursday, SoundHound, Elf, Paramount, The Trade Desk, and some others Thursday in after hours. And then Friday, you have Nikola and Canopy Growth pre-market. I think earnings will still be important. Again, we're waiting for NVIDIA earnings that don't come out this week. They come out next week. So I think, or 2 weeks from now, that's going to be another big catalyst for markets. But I think right now investors are really just waiting for that next bit of information and then that next bit of information. And let's be honest, we have fallen quite a bit. So if we don't get more bad news, it would be likely that we could bounce, at least in the short term. We also have this Israel-Iran situation that's going on, and Iran apparently is going to be attacking Israel, much worse than we've seen last time. I think the markets don't care about that as much. We'll see, though, what happens. If there is a larger conflict, then I could see the markets getting at least short-term fearful over that. We are in expecting some kind of attack within the next 12 hours or so on Israel. So we will see that as something that could affect the markets a little bit more coming tomorrow. And that maybe is a reason to be a little bit more defensive here. But again, I think this remains true. What I said in prior videos, the thing that matters here is the economy. Yes, the Fed, if they make a move, will be important. Yes, geopolitical tensions, they can be impactful. Earnings at this point, basically done. The only thing that really matters for the broader markets is Nvidia. It all comes down to economic data. Are we going into recession or not? And we will have more to discuss on all of this in the next video, so stay tuned to the channel for that one. Let's now go over some of your Tesla stock breaking news today. Yahoo Finance says EVs cost on track to match gas guzzlers as early as next year as battery prices drop dramatically. Elon Musk says there is, quote, an extremely exciting month ahead for Tesla's FSD. And as per Goldman Sachs, battery costs for EVs will go down dramatically in 2025. That will benefit Tesla. And what could also have affected the markets at least a little bit is what Elon Musk points out about Warren Buffett's latest move to stockpile cash. I mean, almost $300 billion worth of cash. Elon Musk says he is clearly expecting a correction of some kind or otherwise simply cannot see better investments than treasury bills. The Fed needs to drop rates. They have been foolish not to have done so already. Wes over on X confirms that Tesla is testing 320 plus kilowatt hour charging speeds on some V4 supercharger stations for the Cybertruck. Mercedes has received approval from Beijing to conduct level 4 autonomous driving tests on its roads and expressways, the first international car maker to obtain such a permit in China's capital city. And let's be honest, Tesla's technology is far superior compared to Mercedes. So this is actually really good news for Tesla, because if Mercedes gets this approval, then odds are good Tesla will also get this approval. Morgan Stanley's Adam Jonas has released his 6th annual intern survey. Mercedes and BMW were the most desired car brands, followed by Tesla in third. Here today, looking at big money option orders for Tesla via the interesting flow sentiment over on Ortex, you have seen 41 different trades totaling $21.25 million with a positive order value of 27%. So it's not that good today, believe it or not. But take a look at this. Short sellers are covering in droves in Tesla stock. You can see return shares today, 3.1 million. Borrowed shares, 1.7 or 177,000. That means on net, you have 2.91 million shares today that are actually being covered on. So that could be some of the strength with Tesla. I think short sellers, they've wanted to get out of their Tesla shorts for a while, and now they're seeing these prices as a good opportunity to go ahead and do that. Which that's actually a very bullish sign, because you know, if hedge funds and institutions, broadly speaking, were bearish on Tesla and thought Tesla was going to go lower, then you would see shorts not covering on short positions. In fact, you'd probably see shorts shorting more shares of Tesla, and they're not. They're actually just covering on their short positions. See, today's short interest of free flow is sitting at 3.76%. You do have $21.69 billion currently sold short in Tesla stock, totaling 104.42 million shares. Sentiment for Tesla today over on StockTwits is actually quite bullish. You have a score of 58, which is categorized as bullish, whereas Sunday you were neutral at 54, so that looks pretty good. Message volume today is normal at 48, and yesterday it was low at 39, and you do have the participation ratio today at 56, which is categorized as high. Google Trends data for the Tesla lineup also continues to be strong. The Model Y hitting the highest levels you have seen since at least mid-June, so a little over a month here. The Model Y is sitting at 28, the Model 3 at 25, the Model S at 11, and the Model X at 9. You can also see the Cybertruck is hitting the highest level you have seen since at least mid-May. now sitting at 81. So it looks like these promotions, the interest rate buy downs that Tesla is doing, is still continuing to spur demand for Tesla. CNN's Fear and Greed Index is sitting at extreme fear territory at 20. Earlier in the day, it was a little bit worse than that. Market momentum, extreme fear. Stock price strength, greed, which is interesting. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. And junk bond demand, also in extreme fear. The percent of stocks currently trading above their 50-day moving average got absolutely destroyed today. It looks like about 15% of all stocks fell below their 50-day moving average today. That's down almost 31%. That's insane. You currently only have 33.68% of stocks trading above their 50-day moving average. This is getting down to where you would expect to see some kind of maybe short-term bottom. Back in October, you hit a low of 20%, 20%. This is October of 2023, of stocks trading above their 50-day moving average. So you're at 33. That's about where you were during the low in April. Can we go lower? Of course. But this is showing you that there's a lot of pain out there. 10-year treasury yields are hitting a new 52-week low today. 10-year treasury yields currently sit at 3.78%, only down about 1.5 basis points right now. Google Trends activity for FSD is also gaining some strength here, now at 23, which is much higher than where you even were a month ago. In mid-July, less than that, a couple weeks ago, in mid-July, you were sitting at 17. Currently, you're at 23, so that also looks pretty good. Tesla continues to run about 4,000 different ads with Google, and Tesla's global inventories falling a little bit for the Model Y, the Model 3 trending higher, the Model X and the Model S just really flat or sideways here. On a technical basis, it looks like Tesla found a lot of support at that 100-day moving average. At one point, you hit a low of $182 per share and bounced back up above 200, at least at the time of recording this video. So you found support at that 100-day moving average. You found support today and some demand around $200 per share. That's great. You did get rejected a little bit around 204, which is where that 200-day moving average is. So I think you need a little bit more strength in the broader markets to get Tesla above that level. But I mean, today was a pretty strong day for Tesla relative to how bad it could have been. If you take a look at the MACD is now negative 0.96. The signal line is still positive 5.20. So definitely seeing some downside momentum there. And the RSI for Tesla is currently at 39.82, which is getting to be on the oversold side. The RSI for the S&P is even worse at 32.05, so definitely getting really close to being substantially oversold. Anytime we tend to hit around these levels, you actually do get a bounce for markets. So I think things would have to get worse. You'd have to see new developments, something along those lines, to get this selling to just continue to go down in a straight line like you've seen over the past couple of days. Like, don't be surprised if we do see a little bit of a bounce here. Same is true for the NASDAQ. When you tend to get down to 30 on the RSI, that's normally when you can expect to see a bounce, and you're there right now. You're at 31.06. So let me know what you think about all of this information down below in the comments section. Hit the like button as well as subscribe to the channel, and stay tuned to the channel for further updates on our markets and Tesla coming out later today at 8 p.m. Eastern Standard Time. You guys have a great rest of your day, and I will see you in the next one.